You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's going on in the world of futures options? Let's find out together, shall we? It is time once again for TWIFO, This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are having a good time this week. A lot of fun stuff hitting the network this week, including a lot of fun stuff heading up to the Pro, which will be making its way out later on to the full network if you want to get it early, and of course, as well as access to exclusive shows like great Pro Q&As we just did with our buddy Steve Sosnick over there at IB, tackling a lot of your vol and trading-oriented questions, as well as, of course, unusual activity, all the weird trades, lighting up our tape and make us go, At the end of the week, one place to go, theoptionsinsider.com/pro is the place to go to learn more as we keep on going right on into the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
That's right, listeners. It's a rare week where I get to hold down the CME Group hot seat. That means nobody telling me where to start on the Movers and Shakers Report. I get to call the shots. This week, if you checked out the graph, if you follow us at Options on Twitter, or if you follow CME Group out there, you can see this report for yourselves. One of the premium reports we give you folks access to. If you want the full kit and caboodle, you should be heading on over to bantix.com, BANTIX.com. Kick the tires and light the fires. Tell Nick and Company we sent you. He'll be very happy to talk to you over there. That's where they have a lot of these great reports. We're kind of just scratching the surface of them here on the show, including this report here, which if you looked at it on the week, you'll see coming off the heels of the Fed and CPI, most of the products on CME, I would say, looks like we're about 60-40, 65-35 maybe, leaning towards the red. Percentage-wise, we have about an equal game this week, both the top light side mover and the top dark side mover, both moving about equivalent percentage moves this week, which is kind of interesting. And since I get to choose, we're going to head over to the light side first. Why not? Mix it up a little bit this week. Number 5, we're kicking things off in everyone's favorite product. It's dairy. Class 3 milk, to be precise, up 5.12%. You know, it's a banger week where both light side and dark side, we start almost exact same percentage levels of movement. So action-packed week in both directions. Number 4, it's the technology sector of the S&P 500, up 5.16% out there this week, listeners. Number 3, back to the ags, this time to the big dog. It's corn, up 5.2%. Number 2, off to energy, it's heating oil, 5.31%. And our number 1 light side mover coming in just shy of 7% to the upside, 6.98%. It's our old friend. We're still hanging out in energy. Yes, it's natgas, listeners. You can't escape natgas these days. It was number 1 in the same direction last week, up 7.25%. So a banger couple of weeks for natgas out here. Again, who had explosive, pun intended, upside for natgas heading into the usually quiet summer season for energy? So not usually a banger seasonal period for natgas, but that's what we're having out there, listeners. Now to the dark side we go. Like I said, it cost us 5.12% to break into the light side top 5. To the dark side, 5.13%. So again, neck and neck this week. That gets us to the metals. It's palladium, number 5 to the dark side. Number 4, we're going on into FX. It's the peso USD, off 5.23%. Where's Rich Excel when you need him? Our FX guy. Number 5 to the same direction last week, off 3.2%. So rough couple of weeks for the peso USD. Number 3, we're going off to crypto. It's Bitcoin, off nearly 5.5% this week, 5.46%. It was number 3 in the other direction last week, up 3.3%. I would love to sink our teeth into Bitcoin. I'm not sure how much crypto paper is lighting it up. We've been kind of been disappointed of late, but we'll see. Maybe if we can find some interesting paper out there, perhaps we shall voyage out there, but probably not. Number 2, back to the metals. It is platinum, off 5.56%. I'm seeing a theme here to our dark side, listeners. It's a lot of metals. Then we have digital gold, of course, Bitcoin, and a little bit of FX thrown in there as well. Platinum, number 2, off 5.56%. And our number 1 dark side mover, remember our light side number 1 was just shy of 7%. Dark side off 7.4% for the number 1 spot. And that is Uncle Mike's favorite, silver. He'll have a sad face today, giving up some of that upside out there this week. So a whole bunch of metals on the dark side. We got a whole bunch of energy and some ags on the light side. But before we get there, listeners, let's head on into what's moving and shaking from a volatility perspective out there on CME this week. Remember, you too can run these reports for yourselves. Just type CME and CVOL into your browser. That will get you to the CVOL dashboard. Once you're there, go into that drop down, choose the aggregates. You want to see the combined CVOLs for all the different complexes, listeners. Then set that drop down to 1 week, go to the ordered list drop down, and bam, there you go. You can see this list just like we do this week. And there's a lot of red on the vol screen this week, listeners, on the CVOL for today and indeed for the week. So kind of an intriguing week on the volatility front out there, listeners. Not exactly surprising given the fact that we're coming hot on the heels of CPI and the Fed both popping off on literally the same day. We don't see that too often. So 2 major event risks for the market coming off the table this week. So not surprisingly, we're seeing vol come in. And even today, only 1 vol product gaining today as well. So we'll start there. That is in the metals. The metals on the week had a range of 19.63 to the downside and 20.63. So exactly a 1 point range on the metals CVOL this week. Right now hanging out at 1983. So up 0.2 of a point from its weekly low, and also our only real vol gainer today. The Treasury vol, the price vol coming in right behind it. That's at a 5.87. That's given up a 0.5 point today, and it's hanging out at the bottom of its weekly range. 587 is the low. The high was 736. So Treasury price vol coming in aggressively. Again, not surprising given the fact that we are post-Fed and indeed post-CPI. Ag products. So the aggregate ag vol coming in at 2389, listeners. Actually, the low was 2273 and the high was 2452. So ag products actually hanging out towards the upper boundary of its weekly range. So ag products being one of the few to really buck the trend. Vol still coming off today, nearly 0.6 of a point, but Net on the week, they're closer to its high than its low. So kind of interesting. One of the few that we can say that about this week, listeners. Right behind it, we have the commodities CVOL, 35.42, off 3/4 of a point today. We're also hanging out at the low for the week, 35.42, and the high was 37.13. So like most of the things we're going to talk about today, with the exception of ags, it's pretty much pinning the needle for the low for the week right now. FX, right behind it, listeners, the FX CVOL, 645, again, off 3/4 of a point just today. When you're starting off at a baseline around 7, that's a huge move. And on the week, the low was 631, so we're slightly above that right now, the high 717. So FX vol getting annihilated this week as well. Let's go out to energy. Is it the same story out there? Pretty much. Energy hanging out at its low for the week as well. The low right now, 52.37, losing another nearly 2 points today, 1.82 points to the dark side today. That also is exactly 4 points below its high for the week, which was 56.37. So energy pinning the needle at the lower end of its weekly range. And bringing up the rear on our list here this week is the yield vol in the Treasury complex. No surprise, this one taking it on the chin this week. 102.25 right now, off 9.25 points just today. Also hanging out at its low value for the week. The high was 130.71. So Treasury yield volatility getting, I think the technical term is annihilated this week, post-Fed and post-CPI. All right, listeners, a lot of action there. Now we have to determine where we start our story this week. And I think given what's been moving and shaking this week on the light side, I think we have to start with our frequent offender, our friend, natgas.
It's time to tap into the deep options well of black gold, Texas tea, natgas, and more. It's time to talk energy.
All right, listeners, to the realm of natgas we go. It was number one on our light side movers and shakers this week, up nearly 7%. And up more than that last week, up 7.25%. So just a banger couple of weeks out here for natgas. Hanging out right now in that front future, 295 out there right now. So again, strong levels threatening a 3-handle. In fact, if we go out about a couple of weeks, we are north of a 3-handle in that future out there. So who had $3 natgas heading into the summer? I know I didn't, but a lot of people out there maybe did. And if that's the case, you are smiling all the way to the bank right now. Is natgas delivering not just from a percentage move front, but also from a volume perspective this week? Once again, the answer is yes. This product just doesn't know when to quit, listeners. 1.086 million contracts on the tape this week. That is just, again, I hate to abuse this pun, but that is just explosive volume out here. No rest for the wicked, at least when it comes to natural gas. Now, where is this paper going up? 41%. So closing in on half of all that paper, over 1 million contracts, going up in the July contract that has 12 days to go. So I guess we're hanging out there this week, listeners. What is the vol? 12 days to go in natgas, 67.60, off about 2.3 points this week. So actually coming in slightly out there. Still frothy, still north of 67, which again is quite a bit of vol when you compare it to a lot of the other products we're going to talk about on the show today. And certainly from a broad equity vol perspective, hanging out at about a 12, that is a substantial amount of vol. Really, you're only going to find crypto that's really going to exceed it out there. So natgas leading the dance on vol this week again, even if it is coming in a little bit. Skew-wise, let's see if there's any evolution. And the answer is yes. Last week, the puts 2.4% cheap. This week, 6.3% cheap. So the puts getting cheaper. Nobody wants them, listeners, even at these fairly lofty levels. And the calls last week, 2.1% bid. This week, 8% bid. So that's a decent premium when you're starting already at a 67.5 baseline out there. So folks are paying up for some calls here in natgas, which I guess goes to speak to the fact that this trend is apparently the friend, listeners. Folks out there think this trend is going to continue, at least if we believe the options skew out here. And let's look at the number one trade. That's probably going to explain a little bit about what's going on with this skew, why there's such a hefty bid to these calls. It's because it is the 3/4 calls expiring in 12 days that are leading the dance with nearly 53,000 contracts on the tape this week. Again, that's going to be more than some of the complexes in total that we're going to talk about out here, listeners. And certainly if you throw crypto out there, it's more than all of the products combined times 10 out there. So just a lot of flow out here just in these 3-quarter calls, listeners. Pretty active all week long. The big day, kind of a tie between Monday and Wednesday, both about 15,500 each. Opening on Monday, closing slightly on Wednesday, so maybe a near-dated trade out here. 10,200 on Tuesday, also closing. 11,400 today against an OI of 26,000 remaining. So could have been some back and forth trading on these this week, listeners. Let's look and see if there's any roll action either up or down, because we have a close battle for number 2, but looks like actually the 2.5 puts are going to take it also in July. July just banger month, listeners. 2.5 puts, 42,000 of those. The big day, again, kind of a tie between Monday and this time today, both about 12,500. Slightly closing on Monday. Today, we don't know, but the OI is about 46,000, so the chance it could be closing out there. 6,600 on Tuesday, 10,800 on Wednesday, opening both days out there. So intriguing stuff out there. If our skew is to be believed, folks are gobbling up these calls and blasting away on these 2.5 puts out here, listeners, for size. Then we have a pretty close tie for number 3 here with 41,000 pretty much each of the 3.5 calls and the 2 3/4 puts. Let's go to the 3.5 calls first. I want to look and see if there's any potential rolling action. We have similar volume on Monday in the 3/4 calls and the 3.5s, about 15,500 of the quarter calls, 13,300 of the 3.5 calls. Now, you'd expect with us rallying to be closing on the lower strike and opening on the higher strike, but it's actually the opposite if it was a vertical, closing on the 3.5s and opening on the 3/4. So rolling down to get closer to the fire. We've seen crazier things. 12,500 of the 3.5 calls going up on Tuesday, mostly opening there. And then 8,800 on Wednesday, closing there. 6,300 today against an OI of 22,000. Puts wise, 41,000 as well of the 2 3/4 puts. The big day was Tuesday, 13,400 on Tuesday, 11,100 today against an OI of about 21,000. 9,000 on Wednesday and about 8,000 going up on Monday. It looks like opening pretty much all week long on the 2 3/4 puts. So that's kind of interesting as well. Looking to see if we have any. There could have been some rolling from the 2.5 and that would make more sense, rolling up to get closer, tighter positioning as natgas continues to rally. But intriguing stuff out here. Again, if the skew is to be believed, then we're looking at sales predominantly on the put wing and call buying out there on the call wing. And intriguing stuff. 3/4 calls going out in 12 days. Listeners, you like those? Would you be a buyer or a seller of those out there? That is what the size paper is out here in natgas this week. But you know what? It's not all expiring in 12 days. Let's scroll around a little bit. Let's see what else we can find. How about let's go out to the October expiration cycle, listeners, because it's like there was some action out there this week as well. Namely, again, not a strike I had on my bingo card, which is why we run the numbers, the 1 3/4 puts. So that future in October is hanging out at about a 3.07 right now. 1 3/4 puts trading for size this week, 33,600. Most of that on Tuesday, 24,600 on Tuesday, 7,300 on Monday, only 1,000 yesterday, and about 600 today. OI total for the week, 43,000. 1 3/4 puts opening. That's a funky one. Let's look and see if there's any other legs that could have gone up against it. A 2/4 puts also pretty active this week, 28,000. They don't line up perfectly. Only 11,000 on Tuesday. Then we have 15,000 going up on Monday against 7,300 going up of the 1 3/4 puts on the same day. So 1 by 2 looks like it could be both days, but in opposite directions. 2 of the 2/4 puts versus 1 on Monday of the 1 3/4 puts, and then 1 of the 2 1/4 puts on Tuesday versus 2 of the 1 3/4 puts on Tuesday. So yeah, they don't really line up well, listeners. It just seems like a explosion of paper on both strikes on different days and for surprising amount of size out there. So 1 3/4 puts, another one I did not have on my radar. What would it take to make those become relevant? Let's see, we have about 104 days, so it's not nothing. That might be the kind of trade you would expect to see normally going through the summer months because it's usually a seasonally pretty weak time for natgas. So someone maybe hedging against the fact that natgas could be falling out of bed for size. Let's look at the put wing here and see what's going on. The vol out there in October is about a 60, up about 1.5 points this week. The puts were 0.5% bid, so pretty much flat. That's interesting. And they swung to about 1.7% cheap this week. So that could lead to some net overriding out there. Again, it's kind of a small move, so hard to read too much into that. And the calls are 2.6% bid last week and 3.4% bid this week. So slight bias in both directions, but not much to speak of in October. More bias near dated on the calls, which is, again, kind of interesting. And you go out to Jan of next year, which is a seasonal time you usually expect nat gas to be active. That future's at a $4, actually is exactly $1 more, 4.07. And the calls are 10.2% bid right now. So again, that makes some sense. The puts are 6.5% cheap. That's the seasonal time when you'd expect some love. You do not expect it in the summer months, and that's what makes this move this week so surprising. And the fact that it continues to deliver from a volume perspective is also kind of interesting. Let's see what else is delivering this week, listeners. Looking at our list, we have, of course, the ags doing some paper this week, including the big dog, which is corn, and a lot of metals out there. But I think let's kick things off in the ags next.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, welcome to the wonderful world of the ags. Get out of that energy drop down at cmegroup.com/TWIFO. Go all the way up to the top of the asset class list for ags, then go into grains and oilseeds, and then stay at the top of the product list for corn. The big dog out there coming into the start of the show. Where's corn trading? 458 and a quarter, up 9.5 handles or 2.12% just this week. Of course, if you go all the way out to the end of our show last week, up about 5.2%. So a banger week out here for corn. Was it a banger volume week? Actually, yes. Usually we expect 400, maybe 450 for a pretty action-packed week. Right now, 582,000 contracts already on the tape for corn. So corn lighting it up. And everyone's talking Fed and CPI. Everyone's looking out there, but maybe looking past some of the ags out here this week at your peril, because corn putting up some numbers out here this week. And of that, 28.5% of that going up in the July contract has about 8 days to go. So I guess we're going to hang out there. That seems pretty near dated for the ags, but we shall see. Also about 24% going up in the September contract has about 71 days to go. That's a pretty big chasm. About 8 days and 71 days. Something in between would be nice, but that's where we're hanging out liquidity-wise in corn this week. Even though the big dog was actually out in September, listeners. It was the September 550 calls. So maybe we'll hang out there. By the way, that future at a 463.5 out in September with, again, about 71 days to go. What is the vol in September corn, you might be asking? It's about a 30 even, up about 0.5 point. So respectable, all things considered. It's not a 12 like VIX. It's not a mid to high 60s like a nat gas. It's right in between that range. So 30, decently respectable for an ag out here, I would say. Skew-wise, the puts last week, 7.3% cheap. This week, 8.5% cheap, so slightly cheaper. The calls, 12.5% rich last week, coming in a little bit, but still bid 9.6% rich this week. And we said it was the 5/2 calls. These are substantially out of the money, listeners. We're at a 463.5 in that September future. So 5/2 calls, leading the dance with about 25, almost 26,000 contracts. The big day today, 15, almost 16,000 contracts going up against an OI of only 11,000. So we are clearly opening out there today. So 5/2 calls. Wow. That's quite a move in corn to make that strike relevant out there. Let's see if we have any vertical action. Looks like we might, because we also have the pars. The 500s going up 11,500 times today. Now that has an OI of about 43,000. So there could be some rolling up to the 5/2 this week as well. Either way, it's still a pretty out of the money contract to be rolling, but we'll get there in a second. 5/2 first, listeners. 15, almost 16,000 today, 5,100 yesterday, 3,100 on Tuesday, 1,700 on Monday, opening every day this week. So folks, just piling into these 5/2 calls. And right behind it, we have the 500s going up about 2,300 times. Again, the big day is today, 11,500, 9,300 yesterday, 1,700 on Monday, or excuse me, on Tuesday, and 500 and change on Monday. So it doesn't line up again 1-to-1 with anything on the 5 halves like it would, you would think, if they were rolling. But opening on both all week long. So size opening paper on the pars and the 5 halves out there in September. Again, listeners, do you like that vertical 500 5 half? Does that intrigue you out there as well? Someone could have been opening out there as well. It does not seem to be a roll because we're opening on both legs pretty much. It's an interesting one. It's certainly an aggressive move for corn, but you have a decent amount of time out there on these, listeners, 71 days. We have seen the ags deliver in the past on some crazy moves. Usually requires some sort of really aberrant development to drive that. Let's say a Ukraine invasion, something along those lines. But either way, size upside in September in corn this week. Listen, did you have that on your bingo card? If you want some more near dated paper, we've got the 4 halves, which are now in the money calls. That July with 8 days to go futures trading at a 4.58 and a quarter. So the 4 halves are over $8 in the money right now, trading about 17,500 times this week. Opening on Monday, then looks like closing the rest of the week, including nearly 11,000 being closed yesterday. So folks maybe starting to bail on these. Again, makes sense. We're rallying this week, blowing through this strike. If you have these calls on, they go away in about 8 days. It's time to start taking some profits out there. If you're long them, if you're short them, if you're feeling the pain, also maybe time to start taking them off the table out here. And about 2,600 today against an OI of 27,000. So there still is some size open on these 4 halves going away in about 8 days, listeners. Intriguing stuff out here in corn. Let's just scroll around a little bit to see if we see any other interesting and or aberrant paper. About 8,000 of the 470s going up. Also in the July contract has about 8 days to go. So that's an interesting one out there. And then we go a little bit farther out. We go out to Dees. The par calls, the 500 calls going up 11,000 times this week. That future at a 475. They have about 162 days to go. So par calls just going up straight up 11,000 times out there in Dees corn, listeners. But let's keep this movable feast rolling. We hit on corn. We hit on natgas. See a lot of shiny stuff dominating our dark side this week, listeners. So to the world of metals, we go.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody. Welcome to the world of the shiny stuff. Go into that drop down, go out of the ags, go pretty much all the way down to the bottom of the asset class list to metals, product family, precious. Then we have our choice from there. Given the fact that it's our number one dark side mover, off nearly 7.5% this week, and because our good buddy Mr. Uncle Mike loves it so much, I think we'll kick things off in silver out here. Again, a rough week for silver, giving up some of the ghost, off 7.5% almost since our show last week. This week, only off 1.34% since Monday. So obviously most of that sell-off coming heading into the start of this week, which is kind of interesting given the fact that we had such a big week for the metals out here with the Fed this week. How much paper on the tape? 58,000. So that's respectable. But again, it's pretty much about in line with that 1 3/4 call we talked about in natgas to give you some frame of reference for how much paper really goes up in these different products. Of that 58,000, 41% going up in the July contract. It has about 12 days to go. We're going to hang out there, hanging out at about exactly a 29 in that future right now, 29.04 to be precise. So giving up about 40 cents this week. And again, that's about 1.3, 1.4%, giving up 7.4% since the end of our show last week. So a rough end of the week for silver last week. In terms of skew, we know the upside is going to be bid. It's just a question of how much. And the answer out here, listeners, is 6.7% this week, coming up from 5.4% bid last week. The puts, nobody wants them, 3.2% discount last week, nearly 4%, 3.9% discount this week. So that's about what we expect on the metals front. Vol-wise, silver, one of the more volatile metals, 31.5, even if it is giving up about 3.5 points with the vol. Again, a lot of vol coming off the board this week, post-Fed, post-CPI. What is the big dog out here, listeners? It is the 30 calls in July, going up about 3,000 times this week. It doesn't sound like a lot, but when your total complex is doing about 58,000 contracts. 3,000 is the big dog. And the 30 calls going up 1,200 times on Monday, mostly opening there, about 1,000 on Tuesday, and then only a couple of hundred on Wednesday, and 620 today against an OI of 4,600. So it's like it was opening earlier in the week, and then folks getting the heck out of Dodge the rest of the week on the 30s. Behind that, we have the 32s going up 2,100 times this week. It's like opening all week long. The big day was Wednesday, 1,200 on Wednesday, 360 each Monday and today against an OI of about 2,600. Only a couple of hundred on Tuesday as well. So interesting, similar amounts for the 30s and the 32s going up on their big day, about 1,200 each, but different days. 1,200 of the 30s on Monday, and then 1,200 of the 32s on Wednesday. So intriguing stuff out there. Looks like you might have had a bit of a roll, 35s down to the 32s, because 35s did 1,276 contracts on Wednesday, mostly closing. They did 1,256 of the 32s on the same day, mostly opening. So given the fact that we are selling off, I could see a bit of a roll down. That certainly makes some sense. About 1,700 total of the 35s have traded out here this week. Let's scroll around a little bit, see if we can find any other interesting and or aberrant paper. Actually, yes, if we go a little bit farther out, listeners, it's a precious metal, so you can probably guess that it's longer term out of the money calls, and the answer is yes. These are the August 35s, listeners, going up nearly 3,000 times, 2,800 times this week out here in August. And let's see. Most of that today, actually. 1,878 today, total of 2,782 on the week. So pretty action-packed week for these 35s. 680 on Monday closing. Not much the rest of the week, a couple of hundred each day. But today, the big day against an OI of 2,600. Let's see. Looks like also 1,500 of the 39s are trading today. And they have an OI of about 1,500. So it is possible somebody rolling down the August 39s down to the 35s. So maybe they got a little bit too big for their britches. Listeners, they were open for size on the 39s. And again, it passed his prologue. Out of the money call paper in a metal, it's going to be buying. You don't see a lot of overriding. It does happen, but mostly buying. So they're probably along the 39s in August. They kind of got run over on these with this pullback, and now they're rolling back to, in their position, a little bit more relevant strike 35s. Even still, you're at a 29 and a third out there in that August future. So that's still pretty far out of the money. They might have to roll again. We'll see, but they don't seem like they want to make that commitment yet. So rolling down from the 39s to the 35s, it is possible. Got a little bit too big for their britches, listeners, and now they are paying the price, quite literally, with a little bit of a roll out there. Since we're talking the shiny stuff, since it is a Fed week, we had Rich Excel on the show not too long ago saying some of these products like gold and others are kind of people's proxy for a lot of the rates and also for FX out there. And clearly, gold comes on the radar for a lot of you during inflation and Fed weeks. Let's see, gold right now, 23.18, off 6 handles, about 0.25%. So a surprisingly quiet week. Again, we had the Fed and CPI this week, so underlying movement-wise, a surprisingly quiet week out here for the big dog of the metals complex, which is gold. In fact, I'm looking right now. It's not even in our bottom or top 10 from an underlying movement perspective this week. Again, we had CPI and we had the Fed this week. You think they see a little bit more action in gold. 23.18.9 is where we're at in that front future right now. Off again, 6.1 handles, about 0.25% just this week. 189,000 contracts on the tape too. So kind of a light volume week as well, which is also surprising. Again, the Fed, a big catalyst usually for the shiny stuff out here, and yet gold, for whatever reason, not really playing ball. Looks like the most active month was going out to August again. So I guess we'll hang out there. 25.3% only going up, and the August contract has about 42 days to go. That future, again, at about a 23.18.9, so pretty much 23.19 out there. The vol also anemic, 13.6, off about 0.8. So again, vol coming off like you'd expect it, but not seeing the commensurate paper we would expect. The skew kind of unchanged out here. 5.1% bid were the calls last week. 5.1% bid again this week. Unched literally. The puts 2.7% cheap in August. This week, 3% cheap. So vol coming in, not a huge evolution on the skew and not a ton of paper. That's a little bit surprising out here. It was the 2500s leading the dance out here. If you are curious, listener, again, the future had about a 23.19. So substantially out of the money calls. It is a metal after all. It's the kind of paper we expect, but still kind of surprising. It was nearly 4,000 of the 2500s going up, 3,800 to be precise, 1,800 of that going up today against an OI of 8,500. So near dated paper. The rest of the week, every day under 1,000. The biggest day was Tuesday, about 800, mostly closing there. So intriguing. The 2400s right behind it, 3,600 to 26, 1,100 going up today, and then 1,200 yesterday. The OI, by the way, coming into today, 4,100 on this strike. So I don't know, is this a week where you're going to be rolling the 24s to the 25s? Probably not. But we've seen weirder things. It could be opening vertical positioning as well. There's some 24 halves going up as well, but they go up about the same number. So it doesn't look like it's a butterfly or anything along those lines. So yeah, just your usual array of slightly out of the money and not even that far out in terms of expiration paper here in gold. So kind of a bit of a snoozer in gold this week, listen, which is, again, a little bit surprising, but it was a Fed week, so I think we'll get out of here, listeners, talking a little bit of the rates.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, listeners, to the world of rates we go. Go into that drop down, pop out of metals, go up one slot to rates. Then we're going to go to U.S. rates and then the product category, scroll down about halfway to the 10-year. That's where we're going to hang out this week. Not exactly a banger week in terms of underlying movement. You know, the rates don't usually make it into our movers and shakers. They were pretty interesting, though, on the CVOL front. With, as you would expect, vol coming in, price vol coming in about half a point. Doesn't sound like a lot when you're starting at a little bit shy of 6. Half a point is a huge move. And then the yield vol, which again is the more volatile of the two, coming in over 9 points, 9.25 points just today, and coming in on the week about 28.5 points. It was about 130.75 a week ago, 102.25 right now. So yield vol getting annihilated in the Treasury complex across the board. Again, not surprising. That's what we expect when you have both CPI and the Fed popping off in the same week. A lot of that event risk coming off the table. And also delivering on the volume front out here in the 10-year. Was it a banger week? The answer is yes. Nearly 4 million contracts on the tape, listeners. So again, about 58,000 in silver, shy of 200,000 in the metals. A banger week, over 1 million, about 1.1 million in natgas, but still, the 10-year says, hold my beer, kids. Nearly 4 million contracts, 3.98 million contracts on the tape. Again, unlike gold, which kind of underperformed this week from a volume and from a underlying movement perspective, the 10-year at least delivering on the volume front. And of that, you know, we're getting into this near-dated flow, which, again, makes sense. It is a Fed week. Folks want to trade around the big event. It's the 111 calls. By the way, we're hanging out at 110.23 in that front future. Up about 1.3%, a little over 1 points, about 1.1 points just this week. Vol-wise, you know there's no vol. 6.3 is the vol, and of course it goes out in a day as well, so that's another thing. Very near-dated paper this week. Skew-wise, the puts coming into this week were 10.2% cheap. So, folks, discounting the puts, that's gone away now, 3.4% cheap. So, nearly a 7-point move on the puts. The calls last week, 8.6% cheap. So, folks were fading both wings out here, which, again, kind of lines up with what we were seeing in the Fed Watch out there, listeners, where it was one of the more unanimous probabilities I've ever seen in the Fed Watch. I think 99.4% probability that the Fed was going to sit on its hands this week. That's reflected also here in the folks just annihilating the wings in both directions out here coming into the Fed announcement. Now that's all gone, obviously. 3.4% discount for the puts. The calls pretty much exactly flat, so all that discount is gone. Again, not entirely surprising. And the big dog out here this week, listeners, are hanging out at 110.23. Nearly 4 million contracts on the tape in a banger week in the 10-year. What was leading the dance? It was the 111 even calls, doing a whopping 170,000 contracts. Again, for frame of reference, that's almost as much as the entirety of the gold complex just in this one call. 170,000. Not surprising, the big day was yesterday. 98,000 on the tape, mostly opening there. 66,000 here today, only about 5,000, a little bit less on Tuesday, and about 1,200 on Monday. That's also what I love about the Treasury complex. It can put up eye-watering, mind-boggling volume numbers on one day and then be completely asleep at the wheel another day in the same week. 1,200 contracts on Monday, almost 100,000 on Wednesday, 66,000 today, against an OI of only 34,000. So folks are still opening on these 111s with 1 day to go right now. So that's kind of interesting, given the fact that these are still decently out of the money calls with about a day to go. 66,000 today. So you're talking about 160,000 just in the last 24 hours here, these two sessions. So that's a lot of paper here, listeners. Then behind it, we have, let's see, a lot of action to be found out here. We have the 111. So 111 was the strike of the week out here in the 10-year, listeners, because you also have the 111s going out a little bit longer term this time, July, with 8 days to go. These did 126,000 contracts. Again, the big day, though, kind of interesting. A tie between Monday and today, so not as much paper yesterday, which is what you would expect. 48,000 pretty much each, Monday and today, opening on Monday. Anyone's guess today, it could be closing, given the fact that there's 104,000 still open on this strike. Only 21,000 going up yesterday, mostly opening there, 8,400 on Tuesday. So interesting. 111's not playing the announcement game. They're doing it on Monday and today. Again, it has 8 days to go, but that isn't that long of a time frame, so intriguing stuff indeed, listeners. And then behind that, we have 95,000 of the 110 halves going up this week. This time, adhering closer to the rule book, 57,000 almost going up yesterday. Mostly closing, actually. And then 14,000 each Tuesday and today, 9,500 on Monday. The OI coming into today, 47,000. Again, just a hurricane of paper out here in the 10-year on this post-Fed and indeed post-CPI week. All right, everybody, that is going to do it for this Just the Facts, ma'am, post-Fed edition of This Week in Futures Options. Listeners, get you in, get you informed, get you on about your trading week, listeners. Remember, if you want to see these reports for yourselves, cmegroup.com/TWIFO. If you want to check out the CVOL, just type CME and CVOL into your browser, and you can run along with all these reports we have here on the show. There's no gating to those at all. Those are available to everybody out there. So if you want to start nibbling at what's going on out there from a vol perspective out here on all these products in CME, I encourage you to do just that. That is going to do it for us on the program and indeed on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern, to talk everything popping off in the world of volatility. And then after that, exclusively for our pro folks, back one final time for the week, exclusively for a little bit of options oddities action. What's lighting it up on the usual activity front? We're going to find out over there on options oddities. Then back again on Monday for the old option block to kick off our week all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.